What's going on, everyone? Welcome to this week's backtesting session. It is not a live, um, but I mean, I've this was recorded probably about 30 minutes before I posted it. So whenever you're listening to it, know that it was practically live. But in any case, um, we always look a bit further back in these sessions in any case. So I don't think there will be much difference. We're just on a different platform now. We've switched from StreamYard to Riverside, and they don't have the same just sort of streaming features. Well, they do, but it's just we had additional cost, and yeah, we're in the process of kind of just playing around with it and figuring out if it suits our needs, because StreamYard no longer did. But we're still trying to bring you the same sort of great, consistent content. So this week's backtesting session, I'll be looking at one pair only, doing things a bit different to how I used to do my backtesting sessions. Perhaps because I'm playing a bit of catch up. Haven't done a mistrade backtesting session in a couple of weeks, I think about three or four. That's when I went into a phase of kind of testing strategy concepts as I neared the revision of my plan. But yeah, I just find there's more value in these. It allows me to uh, stay more in tune with opportunities that I'm missing and opportunities that yeah, I'm not aware of, and that in turn contributes, I think, to my execution. And you know, that's a hypothesis, and I'll want to prove that in the coming weeks. So looking at one pair USDJPY, looking at this over weeks 46 and 47 of the year. And what I'll start by doing is marking out my true opens of the day, which are midnight Eastern Seaboard time. That's 7 a.m. GMT plus 2 South African time. Um, and then monitoring what direction price trades into. So this is just my normal sort of um, screen that I normally show you, but yeah, that's it's not there. I'm just explaining it here. Monitoring the direction that price trades into straight after forming our true open, and then seeing whether relative to how structure is shaping up, um, how that influences the way price distributes over both London and New York session. Because I think there's some value in that. And I think that just builds on top of the previous session, which was institutional sponsorship, where, yeah, we looked at where, you know, bigger capital starts to um, enter the market and, you know, that uh, characteristically being shown by, you know, higher volume and the role that the true open plays relative to that. So I'll first begin by just marking out all my true opens and then just looking at pockets of or at least protractions, because that's essentially what we should be seeing. As the true open forms, the market protracts counter to the way that that price will distribute for the session or the day. And then I obviously look to position myself within those protractions to take advantage of how the move is going to distribute. Something that I haven't considered though is when looking at IPDA, which is the interbank price delivery algorithm, it's accumulation, expansion, retracement, and continuation or reversal, right? And for the last couple of months, I've really only been focusing on the one aspect of that, which is accumulation, expansion, reversal. Hence, me always looking for the protraction counter to the way I'm looking for price to distribute in. But I think there's a lot of profit left on the table and a lot of opportunity that I'm missing out on when I discount the accumulation, the expansion, the retracement, and continuation, because not everything is a reversal. Sometimes you know, the protraction may not be counter to our bias, and I've seen that happen. It's just whether there is a way that I can incorporate those types of trades into my plan, right? What am I looking for when the market is going to keep going instead of reversing? Has it already swept liquidity? Has the protraction counted to the bias? Because we know that always comes. Sometimes it comes before our kill zone open. Most times, or most of the entries I take, it happens after. And so, what markers will there be for me to determine where the price is going to continue or reverse? And I think this is actually going to be a really, really important lesson because this is going to add more conviction to my execution because it's going to allow me to understand where my reversal type entry is valid and where my continuation type entry is valid. And I think it just adds a bit more depth to my trading plan as well, where I'm not just seeing the market move in one way at the open and assume that this is a protraction counts to my bias, where I could be missing something. So I'm really keen to actually dive into this, and I'll begin by marking out all the true opens and then the protractions, and then I'll maybe comment a bit before we look at where potential opportunities were and what I may have missed out on. And this again will probably be more of an observation, just for me to see whether there are recurring themes, and then look, perhaps maybe not this week, but in next week's session, when I'm doing a different pair, I'll either do the same sort of observation thing, or once I've defined certain characteristics, then I can begin to look at, okay, how do I begin to trade these opportunities in real time to test if my observations are tradable in a sense. Okay, so I think there's a lot that's happening and a lot that I've marked out. I just want to keep track of it under maybe observations tag. So what am I essentially looking for? Um, I guess protraction counter from true opens, that is. So this can be a max maybe an hour before because uh, the idea behind it is that you're targeting session volatility and we get the most volume near the session open. And so even though there may be moves that take place maybe 2 hours before an open, that could be an inducement before the session volatility sweeps, highs or lows or whatever. So for me to consider that, look, this may be the time-based liquidity sweep, I want to keep it as close to that session open as possible. And obviously, once session opens, it's open for a number of hours. But again, the idea is that the first 3 hours are when we get the most volume. So once we have opened, um, look, and then this is where I guess the confusion comes in. Am I still looking for the protraction 2 or 3 hours later, or is what we're getting then the distribution? Maybe that's what I need to investigate. Um, expansion. Six. Mm, I think that's an important one because you'll be waiting 2, 3 hours nearing the end of your kill zone, and then you see a protraction, and I mean, it goes both ways. You see a protraction and you think it's protraction, but then price just keeps going, and you still maintain that same bias, and not realizing that this is actually the distribution and not the protraction. I think it actually doesn't even matter when it is over the session. I think it's just happened multiple times where even at the open of the session, price just goes and goes, and a protraction is not meant to displace on the 1 hour. That is more commitment, and that is essentially the move that you want to be in. And so there's these late and early entries that I've been taking that are more akin to a distribution as opposed to a protraction. And I think understanding which is playing out is going to add a lot of value to at least the accuracy of my executions. So now that I know what I'm looking for, traction counts to my bias, signs of when the protraction has been confirmed before kill zone open, um, expansion, retracement, continuation type entries, and then order blocks and fair value gaps that form near kill zone. Let's see if I've been able to capture that in, this observation. And there are points where um, something perhaps that I'm also unsure of is, and something that I'm seeing as a bit of a recurring theme is what happens when, because our true open is essentially supposed to be a point at which price protracts in one direction, then distributes in the other. And is there any particular scenario that's playing out when we get multiple true opens forming, but price isn't going anywhere? Obviously, that's a sign of accumulation, but what can we read between the lines of that accumulation to then position ourselves for what is sure to be a much larger distribution then? Because obviously, the more we accumulate, the more volume we're trying to gather and generate for the next, um, high volume move. So I think that would fall within the realm of things that I'm not sure of is uh, before price distributes. I don't know if that makes sense. Forming in an area. Um, yeah, I guess so. So we can see here, just the first example. This was, 7 a.m. was when we got the turn. This was 2 hours, 4 hours, 3 hours actually before Killzone opened. Um, and maybe starting on our high time frame, just so that because I've technically marked it out, so I can actually just come back to the beginning now and just we can play out each day and see what we observe with each day, having marked things out already. The 4 hour is so daily, firstly, is in a premium area. We're targeting this old high, we've got the 62% fib, we've got the 70.5% fib level resting above. The 4 hour is counter trend. I think this was the week after the elections. And yeah, I think I was actually I was long at this point. Um, Potentially trying to look for scale-ins, but we obviously had the sweep of liquidity here to the upside. We broke that high there, came down into internal range liquidity, which was marked by that fair value gap. And we were now distributing to the upside, targeting these equal highs. Well, obviously, firstly, external range liquidity there, and then old highs as our primary target. And so, 4 hours clear. Um, and I see what probably led me to not take this. So 1 hour, we can see, as we trickled lower, we're forming some structure, lower low, lower high, lower low, came and broke that point there, and then consolidating before the move. Um, yeah, this was in essence a new sort of high. And so while my 1 hour range was in line with long entries, or long entries in line with the 1 hour range, I normally wait for price to get back to the 50% fib level to then take that. But that, yeah, that doesn't allow me to capture opportunities where we're very impulsive and we're not getting those deeper pullbacks. So perhaps there's something I'll learn in this that helps me modify those entry that entry criteria, or rather those trade parameters. Because when we come down to the 15 minute, and I just want to see how we behave when we do correct and protract, perhaps we can start to use 15-minute ranges. Maybe that's what's necessary. But I just want to see where we protract to and how price behaves to see if there's any. And look, okay, we outside of, look, we were at the low here. So that was it. That's all we got, which isn't a lot. Because even from a 15-minute perspective, we didn't get to that 50% retracement level. When I'm looking at, methods like identifying our range in the form of, there's a high, that's the low, perhaps. Um, and then we look at, taking the entry at the 50% point of that. We didn't get anywhere near that. This was something that kind of just distributed way before. So was there a mistrade here? Even on the 15-minute, the only thing I can really identify as a point at which an entry could have been taken was this order block here. Look, it was the order block that formed just after the kill zone open. It's the only thing. That and perhaps there was this breaker block here, which overlapped quite nicely with that actually. Yeah. Am I convinced? Probably not. Um, but yeah, the only thing that makes this tricky is we did have this sweep of liquidity before within this 1 hour order block, which look, we had recapitalized once, but then we kind of just got the sweep below and still held. So potentially, yeah, there was a move there, but I'm not too convinced. If we look back at our notes, is there anything that's there? Protraction, signs of when the protraction has been confirmed before kill zone open. Um, Look, there's enough here. We we've got sweep of liquidity within a 1 hour order block. This is the second true open that's formed. Um, so I'm just gonna mark that out here. Um, what can I call this type of entry? It's not really a type of entry. It's pre-kill zone time-based liquidity sweep. One, we've got um, uh, multiple true opens, or rather, say clustered true opens. We've got 1 hour order block. We've got the time-based liquidity sweep within the order block. Um, yeah, that's the only thing I can see at the moment. Um, second sort of observation is, you know, expansion tracing continuing the order blocks and fair value gap that forms. So that did form there. Got a low fair value gap here, but I don't think it's of much significance. How long? How do I position myself in multiple true opens? So yeah, okay. First example, touch and go. Not convinced yet, but not surprised. It's only the first example. Let's see. Surprise trades higher. We start to correct a bit of indecision. Our true open comes and we go higher from the true open. We open and then we come lower. We are still bullish on the high time frame. Um, if we must remind ourselves, still bullish. Look, we've reached now these equal highs, which is actually quite important, and that's the point where we began to consolidate equal highs. We've reached that point, and so perhaps some profit taking at the area that explains the indecision. Got multiple sweeps of liquidity. There could have been those looking for yeah, could have been those looking for short entries off the multiple sort of time-based liquidity sweeps that we were getting. Um, look, got a time-based liquidity sweep after the kill zone open. That then also tapped into this old high. Um, I think it was probably no, and I was within. And we were within this fair value gap here. I think if I didn't just close out on, if I hadn't just closed out on longs, this could have been looking very clean for buy, for sell. I mean, script has been clear, swept lower. We fell to sweep lower here. A lot of inducement in this area. We came up, tapped into these old highs, and then kind of just sold off. The only thing was we obviously protracted before, and I want to see how the 15 minutes looking. Yeah, look, it was clean. This was a clean short type position. Um, just want to see what we would have got with management. Would we have been able to close at break even, knowing that this is the fair value gap here? This is a long-term play. Would we have set a wider stop? Probably, but I want to look at setting what's appropriate to see. It's not about seeing how tight we can get it because look, always could have set that there, knowing that there's so much room to the downside. This is a daily play. So even down to these 4 hour lows, it was a 1:6. So I would have been comfortable setting a 60 pip stop above there. But um, yeah, I think does that speak to what kind of targets am I looking to set? Because on the other hand, not targeting those higher time frames. If I'd set conservative 30 pip stop, still above the highs, we shouldn't technically trade above this order block here because that is a bullish order block, a bearish order block. And so down to these equal lows, it's nothing still. It wouldn't have made sense. Down to perhaps these equal lows, 1:5, we still got to 2R. We would have closed 50% and moved stops to break even. So we would have walked away with something here. Obviously not if our stop had been way up here, because we would have only achieved 1R and then price been up there. So I think that's an interesting observation in that the more conservative, I guess more refined stop, but because of a conservative TP, would have resulted in um, a profitable position, still being closed out at break even, but for partial profit as opposed to a partial loss. Um, and then I'd mark this low because we actually just came and swept this liquidity. And that's the interesting thing here as well. Sorry, just another thing that I'm picking up is that we sold into the New York time-based liquidity sweep, right? So that's another question. And something that, perhaps I need to answer is what am I unsure of? Am I trading session um, volatility or weekly volatility? Meaning, if I'm just trying to capture the volatility in a session, then I need to set more conservative targets and not be targeting the distribution for the week because that's maybe where I'm overshooting targets, which takes a longer time for one, me taking risk off the table, and two, then, closing partial profits. Um, and that could be leading to increased losses. So it may not be that I'm positioning myself incorrectly, but we don't know also when the move's ready to go because this was clear signs here that, you know, price is going to come short, but in no way did it mean that price was going to come all the way down to those daily targets. This, as if I could have gotten a tighter stop, even this would have been ideal as TP. If I could get a 1:3 there, arguably it might have been on the 5 minute. There was a time-based liquidity sweep on the 5 minute, and then a break of structure there. I don't think it would have made too much of a difference. Maybe 25 pips, placing it above there. Still only like 1:2. So yeah. So I think then we do get the time-based liquidity sweep to the downside, and then we distribute a lot higher. Um, there are my notes. Just trying to see where this weekly high and low is. So the weekly low is formed there, or the weekly high is far up there. So, but then also then reading price, seeing that we sweep this, literally coming into New York, we're below the true open of the day. This entry made sense because we were above. Now it still makes sense because we're below. And then we see signs that price doesn't want to stay below there because that's something that I'm trying to monitor as well as, how do we trade through highs and lows? Is it a conviction? Is it a convicted close, or do we just sort of sweep and, reverse? And so I think there was a potential mistrade here because we swept that low, um, and then we distributed to the upside, even if targets were just here conservatively. And maybe it's a question of not so much setting targets, but making sure my stop position's good and having a more of an actively sort of managed um, strategy or trade management sort of approach. Swip the open. Let's also swip the open actually before going higher. It's in the order block. We did get the protraction lower here. Okay, and we just continued higher. And I think at the time I was maybe looking for a sweep to the upside here. So just looking at that second sort of block of price that we've just kind of dissected. Protraction kind of a bias near. So this was confirmed, I guess. Yeah, so it swept like 30 minutes before. But yeah, it was confirmed before. So, are there any telltale signs? Price trading below true open. No key indicator area here. So we did have this order block which formed at the true open, and I think that's something we look at. Order blocks and fair value gaps that form near the kill zone open. Yeah, time-based liquidity within the order block which formed the daily low. And I think while this is also pre-kill zone time-based liquidity, if this occurs even, so this one's more of an example at the kill zone, at or just after, then I think it just adds a bit more confidence to the position. I think the only question is when it happens before, there's a question of will it resweep liquidity before we then, go higher. And I'm just going to end off the week because, yeah, I'm not too great on time. Interesting. I think it's just quite interesting how you can really take two separate positions on the same day, um, just depending on, study. Sorry. Um, this looks it's exactly like this position down here where during London session, we formed the high of the day, and it actually wasn't the high of the day, but we formed a high, well, of the day at that point, swept, and then distributed lower. Was wasn't a full sort of TP, would have achieved 2R partial profits, and then stops move to break even. And then similarly on the way up or during New York session, we sweep liquidity to the downside this time, and then same story. Would have just reached 2R, partial profits taken, stops to break even. Um, what I think has, well, or why I wasn't looking to take these entries, and um, actually there's actually no reason. These are just clearly missed entries because this clearly meets my criteria on in terms of 50 minute, the 50% pullback in terms of IPDA. So 50% was achieved there. And then even on the way up, price was clearly generating liquidity to the upside. So IPDA was clear. And so just a reconfirmation there. So we know we were sweeping to the downside or distributing to the upside. And even before the last sweep, we did get a sweep to the downside. Maybe that's what would have put me off was um, it's easier said than done in hindsight where we sweep at market open and then I'm thinking, okay, we're distributing to the upside. And we do, arguably, but we then sweep and distribute lower. So I wouldn't say this was one that formed pre, time-based liquidity because it formed at 12. Um, and this one as well, it was about 30, 45 minutes after the open that we swept to the downside. Um, just missed entries, to be honest. Nothing more to it. Um, I do need to journal these because I think there's some insight here. Yeah, this one could have been a bit of a banger, even if it was just to that daily order block, the base of. That's four positions over 2 days, um, which just highlights just, I think, how much opportunity there is in the market. And I'm going to end that here because we're now at the top of the structure, and what comes next is a bit of a shift, change in character or shift of structure to the downside. And these have been clear sort of trend following positions, or momentum based positions where the generation of liquidity was quite obvious. And so now we are in this high time frame level. And I think there's going to be different indicators as to price now, shifting sentiment, and what structure will look like in those moments and what to keep an eye out for. So I'll probably record a part two of this because this was quite an interesting lesson, and I think there's a lot to take away from it, and there's a lot that I think challenges my current plan, in terms of how I look for entries, how I set take profits, and how that's affecting my profitability, I think, at the end of the day. Um, and keen to just continue sharing that with you. So yeah, I'll journal these. I think there was one other position down here. Um, but I think capturing the opportunity in these types of environments, um, is going to be a big contributor to I think long-term profitability. So remember, guys, consistency is the choice you make when you start doing the things you know you should be doing day in and day out.